Why doesn't the market care that things are so fantastic? Does anybody, maybe I'm the person to be answering that question, but does anybody have a reason why you're trading at discounts to NAVs and people just don't seem to recognize the fantastic opportunity that is?
First of all, it's normal. Every time in the last two major bull cycles have been 2003, started then and ended around 2008, and middle of 1984, ending in 1990. And both of those periods, the stocks started off in the same position, that they were trading significantly under NAV, like most of the product tanker companies are trading about 50% below NAV at the moment. And this happened in both of those two cycles. And it's as a result of, whether it's Peter cried wolf, or people just give up, or they never think it's going to come, or they're too hurt. But whatever it is, none of the companies on this panel or the market itself have done anything other than disappoint for about 11 years now. And that's what the market's been in. The market's been in a bear market for 10, 11 years. So what creates the conditions for a super bull market is what we have at the moment, which is tremendous pessimism from the investment community, exhaustion from the investment community, combined with lack of real free cash in the companies. The debt side also is constrained. The shipbuilding is constrained. So you've actually got a 20-year low in shipbuilding orders. So everything is at its bottom position. So this is quite normal, and I think this is also part of the aspect of what gives the people, I think, on this panel that confidence, is because we're looking forward to not just a period of great demand growth, but the supply side is very constrained at the moment in the product side.
Right. Another one of the concerns is that the ship owning community has this tremendous propensity for shooting itself in the foot. And when given the opportunity and the capital availability to participate in an upmarket, there's no capital discipline. And so it's, for a lot of people, I think, just something that has now been carved into this category of uninvestable.
But that's just a stupid excuse. I mean, that's the same that we heard in 1984, 85, same as we heard in 2003. Of course we won't change as an industry. Of course we will shoot ourselves in the foot in the future. But right now, the 11 years of a terrible market, the gun's been taken away from us. It's impossible for us to shoot ourselves in the foot right now. You have to have a sustained period of market improvement and revenues and stocks trading as premiums to NAV and a capital market that's functioning not just from the equity side but from the debt side too, to get to the point again where we're going to shoot ourselves in the foot. Of course, I haven't changed. I mean, 20 years ago I said that we're little children, we'll never grow up. And if you keep feeding us candy, we will be sick, and you guys will have to clear the mess up. That will happen again. It's just not going to happen for a little while right now. I don't really understand that comment. You've seen a consistent increase in forward time charter rates for months.
Yeah.
That's one. Since nobody thought November was going to be as strong as it was, nobody thought December was going to, I'm talking even about us on the panel here. None of us thought that December would be as strong as it was. When we got to December in our analyst meeting, everybody thought that January was just going to fall off a cliff, and it just got stronger. If January was going to fall off a cliff, it was going to be February. Right. And then, February might be okay, but you know what? Refinery is going to be extended turnaround, and you're just going to get destroyed when it comes to March.
Right.
I mean, I know we're pretty close to the end of, we're approaching that finishing point to the extended refinery turnarounds. And as he said, the demand has been steadily moving up and that nothing's happened anymore. Looks pretty good. And the charterers are telling you that. There's so many charterers have taken tonnage in, they've lengthened their books. Way more than any of you guys know or the analysts know, because they're not reporting the length that they've got at the moment. Because they keep piling it on. It's so much better for us to have a strong fit, to wake up every morning and we're getting cash into the company than to have our stocks trade well.
And if the market goes, let's say for MRs to 25,000 a day, and we're generating on a cash flow, and the stock price doesn't, reflect that, then we also know what to do.
Right.
You were saying LR2s, there was fixtures at 100,000 a day or bids at 100,000 a day? MRs, fixtures at 32, 35?
Yeah, I'm really not guessing on this one.
Okay. Well, you were the one who said they were rates at those levels today.
Sorry?
You said there's rates at LR2s 100,000 a day and MRs at 30 plus
Yeah,
thousand.
I could read you my trading report if I wanted to, but
We
I'd
will
probably have
take
to
you
kill you.
at your word
You'll
for
just
it.
have
All
to take it at my word. I mean,
I got you.
these are really strong things.
Sure.
I mean, I'd like to put, something's really incredible here is this, you talk about the market, and I asked Tony this question earlier. I mean, my God, even in August was twice what it was last year. This market is climbing. It will climb the wall of worry. All the stocks that all four of these companies' stocks are going to be significantly higher before the end of this year. When I mean significant, we're talking 50%. It's important to understand they're climbing the wall of worry and ignorance. You guys don't know what's going on out there, and you're worried. Okay?
So
5 weeks ago, it's important. 5 weeks ago, the conversation was this: Robert, LR2s are only 18 a day. We have 20,000 a day in our fourth quarter model. When are you going to get worried that rates won't actually be good in the fourth quarter? That was 4 weeks ago.
Okay.
2 weeks ago, it was rates are now 35. They can't go any higher, can they? How long will that take?
Okay.
3 days ago, it was they're now 50. They've obviously got to pull back from it. Today,
So
I
stop.
heard 4 times today, 4 people in one-on-ones go, you know what's holding your stock price back, Robert, don't you? And I said, what? Your rates are too high.
All right.
So what are you going to give us today?
Got it, okay. So stocks going up 50%, we should all buy call options expiring in January. Taking someone's lead. Robert, thoughts on that? Ordering, is it going to get to 20% order book to fleet ratio?
At the moment, everything's constrained, right? You know, as I've said many times before, and I'll say it again, ship owners as children, we won't change. We love new toys, like new ships, like ordering new ships in the long term. Right now, we're constrained. We don't have any money. There's not a reason to do it. The returns are better that we don't order. There's not the credit there. And the major product tanker owners don't have a will to do that or a reason to do that. And whilst the cash flow and the capital component is there, you're not going to get big ordering. At the end of the day, it's going to be up to you guys. You guys are going to be tested first. You're going to see secondary sometime, not now, but sometime in the next 6-9 months, somebody's going to come and try and do a secondary use of proceeds, new buildings. If you fund it, okay, good luck, right? Even worse than that, you might even get a new IPO where the entire funding is for new buildings. So you guys will have a vote in this. So you can constrain the tap of equity really well to new buildings and keep that order book disciplined by simply not funding companies that have use of proceeds and new buildings.